Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Singapore Fintech Festival, and joining me for this segment, we have Kelvin Tan. He's the CEO of audax to discuss going beyond cash and Southeast Asia's love affair with embedded finance. And it's great to have you with us, Kelvin. Welcome to TradeTalks.
Thank you, Jill. Happy to be here.
All right, MFi, another one for us. DeFi, CeFi, MFi. How does embedded finance work for every country in Southeast Asia?
Well, in most countries in Southeast Asia, given that there was a significant lag in terms of financial development of the markets in the last 15, 20 years, there's been a case of leapfrogging, the proliferation of large ecosystems, e-commerce platforms, social media, ride-hailing capabilities, whereby individuals and consumers in those markets are now accessing their financial services through these platforms rather than through the traditional banking system, which has always struggled to reach customers beyond major developed cosmopolitan cities in developing Southeast Asia. So from that perspective, we see embedded finance as the future of not just financial services per se, but also the future of expanding the whole theme of financial inclusion in developing markets like Southeast Asia, like Vietnam, Indonesia, Thailand, and so on and so forth.
What are some examples of embedded finance having successfully strengthened financial inclusion in Southeast Asia?
Well, we at audax help Standard Chartered Bank, for example, create Nexus, which is a banking as a service capability, and they've partnered with Bukalapak, which is an e-commerce platform in Indonesia with 110 million users. And we've seen that the customer base of Standard Chartered Indonesia has grown exponentially in the last 6 to 7 months outside of the cosmopolitan areas of Jakarta and Surabaya in Indonesia, but includes all the neighboring provinces as well as provinces that Standard Chartered, for example, would never have reached without this particular platform and capability of embedded finance. We also see the same in other players. So Bank Jago, for example, with a GoTo, as well as other ecosystem players like Lazada and Shopee. So you would see more and more of that proliferating as the use cases expand beyond Indonesia, Vietnam, and Thailand.
How do you see the concept of embedded finance transforming traditional banking and the services that these types of institutions offer?
I think traditional banking needs to, at least in the markets whereby you see that leapfrogging happening, to be a lot more comfortable with embedding their services, not just the product, but the services through large ecosystem players, to be able to reach those customers at scale, at the acquisition cost that is far lower than average. And you need to understand that there's a generational shift as well happening in those markets, whereby customers are far more trusting and far more comfortable using these platforms as their sole providers of financial services, as opposed to more developed countries in the United States or in Europe, whereby the idea of taking a full-fledged financial product from something that doesn't look like a bank is alien, and even that's changing as the generational shift is happening.
Yeah.
So it's just that it's happening much faster in Southeast Asia and most developing markets around the world, not just Southeast Asia, because of the fact that they are leapfrogging this evolution.
What are some trends as banks tighten up on their digital transformation, risk mitigation? How do you see that evolving?
So we see a massive trend on digital transformation in that most retail and SME banks, at least for banks that focus on those particular segments, they're increasingly looking for scaled digital banking models, right? As the challenge comes from neobanks, non-bank financial institutions, as well as ecosystems themselves providing closed-loop lending and other products within their platform, banks are struggling to figure out, how do I scale massively without having to incur the capital cost of scaling? Because how would a bank scale previously, right? They would build hundreds of branches, they will hire thousands of people to run into the streets and start selling you credit cards or loans or mortgages, but that is not a sustainable scale model for most of developing, forget Asia, most developing countries in the world, given the geographical expanse, given the physical obstacles, as well as the capital cost it requires to embark on a model like that. So what we see is a lot of banks moving towards a less capital intensive but technologically driven scalability model, creating an entirely new banking platform so that you can embed your services at scale, running tens of millions of concurrent users in other platforms, rather than trying to run a embedded finance play on a legacy tech which is built for 9 to 5 branch banking. So that change has been massive. The other change in risk and mitigation is understanding the ability to aggregate data from multiple ecosystems and actually learning to understand fraud, operational, and credit risk of an individual. So just to make it simple, Joe, imagine, right, you have an Uber account, I'm pretty sure. You probably have an Amazon account. in the US. If a singular bank with a single data infrastructure powers both Amazon Bank and Uber Bank, and Jill is both a customer of Amazon Bank and Uber Bank without knowing, say, Wells Fargo, for the
Right.
lack of a better word, is underpinning it. Wells Fargo should have access to the data across multiple ecosystems, and we'll see Jill and what Jill does on Uber and what Jill does on Amazon, and create a far better user experience for Jill, as well as understand how better to credit underwrite Jill because of what you buy, how you ship, what are your repayment proclivities on those two platforms.
Right. In theory, I understand that.
Yeah.
Is there any pushback from a company like an Uber, like an Amazon, Wells Fargo, just using these random names as examples, having access to their customer data, which I would imagine, I think they probably consider proprietary? Are there any issues accessing other companies' data? And then does that impact the consumer from a protection perspective?
Well, the thing about this is if you can create a win-win-win-win situation, which is for the regulator, for the financial services product provider, for the ecosystem player, and for the consumer, there should be very little reason to push back on this, because from the, and this is why Standard Chartered called it Nexus in the first place, from the consumer's perspective, of course, better servicing, much better way to credit underwrite, much more comprehensive offering for what you actually need at the time at which you need it. For the ecosystem players, you create a far stickier ecosystem, because now you access, say, the Amazons or the Ubers of the world for your financial services requirements, and therefore more interactions with the platform, more ability to monetize, and obviously creating a better service attitude for them. For the banks, scale at acquisition and scale at servicing, which means that your cost of acquisition and cost of servicing comes down to a fraction of what it used to be. And from the regulatory standpoint, it makes a lot of sense, because at the end of the day, because the license holder is the bank and the bank is running the conversations across and ensuring an optimal experience, the regulator doesn't have to come up with a new framework to regulate Amazon trying to become a bank, or Uber trying to become a bank, for the lack of a better word. There was one neck to choke, and that's the banks, and that framework does not change. Right? It does not change. The bank is still held to the highest standards of security, of privacy, of credit risk that the regulator can monitor very effectively today anyway.
All right. Appreciate the insight, Kelvin. Thanks for joining us on Trade Talks.
Thank you, Jill.
And thanks for joining me from the Singapore Fintech Festival. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.